unfettered property rights, absolute property rights. Another great dream of the industry, an exciting idea, was the idea of being able to transfer your assets, non-censorship transferability. And that meant that this wasn't going to be local property. This was going to be global property. So the crypto industry was all about global property rights. And when we think about that, the 20th century gave us property in the form of real estate, in the form of livestock, in the form of physical commodities, in the form of art, in the form of financial assets. But every other piece of property you hold at the pleasure of someone more powerful than you. And generally, they're either permanently local property or they're conditionally global property. Try to take a bar of gold through an airport and you'll find that you don't really have property rights. And so the idea in the crypto industry was, what if you could own it? What if you could transfer it? What if no one could stop you? And then along the way, people struggle with this idea of medium of exchange. And one of the big things that came out of the crypto industry was stable coins. How do you tokenize currencies? And of course, we saw that start slow, and then it got a little bit stronger. But what you had was small experiments with stable coins, and some of them were good, and some were bad, and some were ugly, and some crashed to zero, like UST and the Terra Luna complex. But the idea was there. Now, another interesting idea, and it's not a bad idea, the idea of being able to move currencies at the speed of light between billions and billions of smartphones, not a bad idea. It's pretty obvious on the surface why you might want that. The other ideas that came out of the crypto industry were tokenizing brands and tokenizing real-world assets, and they experiment with them, with crypto kitties and all sorts of NFTs. And what did they have? The industry had a lot of wonderful, interesting, exciting ideas. The idea of tokenizing a brand is every celebrity on earth or every small business on earth could raise capital and could change their business model. You could tokenize memberships, you could tokenize fan clubs, you could tokenize just about anything. And the idea of tokenized currency is money at the speed of light 1 billion times a second between computers. And the idea of digital property was property rights to 8 billion people that can't be deprived of. And the idea of global was a network of the highest common denominator. The most profound idea is I buy Bitcoin in Arkansas, I bury my Bitcoin hardware wallet in the ground behind my house, I go to sleep for 30 years, and I wake up and I find that an entrepreneur in Beijing and Singapore and Abu Dhabi and London found, a dude that's Saylor, in Miami Beach comes up with a way to buy hundreds of billions of dollars of Bitcoin, drives the price to $10 million a coin, and I got rich without understanding what they did, without knowing anything about them. Maybe I get rich because someone in Russia, China, in the Middle East, and Nigeria did something that makes me rich. That's never going to happen to you if you just invested in Arkansas real estate or Arkansas timber or Arkansas art or Arkansas financial assets. The idea that there's a global economy that's conspiring by any means necessary to make you rich was like a first in human history. Very powerful. Now, what did the crypto economy not have? Okay, here's what it didn't have. It didn't have legitimacy. It didn't have corporations. It didn't have banks. It had no support from insurance companies. It didn't have adult supervision. It didn't have a lot of common sense. People did stuff in the industry that's just crazy. If you find one of the ambitious banks of the world today, they're just lightening up and they're beginning to offer 20% advance rates against IBIT that they have clear line of sight to. That's 20% leverage. You go to a crypto exchange, you can trade cross margin 20x, that's 2,000% leverage. 40x, 4,000% leverage. We had, if you actually found a bank that gave you 80% advance rates, they were considered to be cavalier and irresponsible today. But we're talking about a complete Wild West in crypto where people could give you 4,000% leverage. And if you daisy chain 3 of these assets together, you get 40x by 40x by 40x. And, and people are wondering, what could go wrong? People say to me, well, why won't the crypto winter happen again? And what caused it? Well, what caused it was daisy chaining 2,000% leverage across 3 different assets, and having irresponsible risk managers or non-existent risk managers. Trust me, it's not possible to do that with JP Morgan or Bank of America or Goldman Sachs or Morgan Stanley with any other conventional asset. So the industry, it didn't have the bankers, it didn't have capital. There's no money. When we bought $250 million worth of Bitcoin, I put it out on the wire. I didn't realize at that time we were the first public company to buy Bitcoin in any size. And I didn't realize that was the largest investment of actual capital in a crypto network in the history of the industry. Okay? It just didn't occur to me. I had other things on my mind. I was trying to save my company. But think about that for a second. There was no capital. The early years were 2009 to 2020. Then the transition years were 2020 to 2024. And that was the time period when we still didn't know what this was. It still wasn't quite legitimate. You had, of 12 cabinet members in the Biden administration, 1 was neutral, skeptical to Bitcoin, hostile to everything else. And all the other ideas, digitizing a brand, tokenizing a security, tokenizing a currency, free, 24/7, 365, trading at the speed of light, all those ideas were dismissed as irrelevant, unnecessary, and the entire view of the industry was a bunch of scam artists. We should shut it all down. The Bitcoin thing I don't like, but I can't kill it. I acknowledge that it's sort of an asset with an issuer, but I'm not going to help anybody embrace it. I'm going to fight a rearguard action to slow it down as long as I can. Hence, there are no in-kind creator redemptions of Bitcoin ETF. The ETFs, they dragged their heels. It took 10 years to approve the Bitcoin ETF, right? If you cover that from 2013 or something to 2024, that's how long it took to even approve one. When they were approved, they were crippled. They were crippled in their dynamics, like in-kind creates. They were also, their options markets were crippled. They had no options market. In fact, the options market on IBIT was crippled until about a few weeks ago. So that gives you a sense of how long the establishment took dragging their feet on just basic Bitcoin. But there was no love for anything else. And these other ideas, they're not awful ideas. Why can't 400 million small companies in the world raise capital over the weekend instead of taking 3 years? It literally takes 3 years to go public. That's why like 0.01% of companies can ever do it. So what happened over the past 12 months that's so extraordinary? What's happened is we had a switch in administration in DC, and you went from 11 cabinet members ignorant and 1 ambivalent and skeptical to 12 cabinet members that are supportive, enthusiastic, a supportive president, a supportive set of financial regulators, head of Treasury, a supportive CFTC, a supportive SEC, a supportive OCC, a supportive Federal Housing Authority, intelligence, right? Tulsi Gabbard or Kash Patel, the FBI supportive. It makes a big difference, right? Howard Lutnick at Commerce supportive, Kelly Loeffler supportive. And now I would mark the era of institutional adoption and the commercialization of the entire crypto industry, and perhaps the evolution of the early crypto industry into the emergent legitimate digital assets economy, I would mark that inflection point to November 5th, 2024, the red sweep. That was the inflection point, and the market sensed something was going to happen then, but it wasn't quite clear what was going to happen. And here, now that we're about 9 months, I guess a bit more than 9 months down the road, 11 months down the road, it's a little bit clearer what's going to happen, and it is this. Now companies, celebrities, politicians, lobbyists, lawyers, institutions, adults, capital markets, capitalists, capital, governments, municipalities, they are all being integrated into this crypto economy, one way or the other. And there are things that we are going to lose, and there are things that we are going to gain. You know, there'll be a little bit of liberty and chaos, right, and speed lost. Some of the global nature of the industry will be lost. But there's going to be an extraordinary amount of utility and power and wealth and empowerment that will be gained. And the economy is going to evolve in various degrees of localized spheres of influence and continental spheres of influence. And I'll give some examples. First of all, we were the first company to dare put Bitcoin on our balance sheet. People were waiting to see if we would get zapped by the SEC or shut down by regulators, and it was literally abject terror. Then there were 20 companies, then there were 100 companies. There were like maybe 60 about a year ago. There are about 185 Bitcoin treasury companies existent today. And that was one wave. And that rippling adoption will continue. Just about every day, I read a press release of some company buying more Bitcoin for its treasury. The second thing that happened was the copying of that business model, and you now see emergent digital asset treasury companies. There are about 10 Ethereum treasury companies, public companies holding Ethereum, the most well-known being Bitminer, Immersion, led by Tom Lee. Tom Lee has emerged as probably the most visible, influential spokesperson in the entire Ethereum ecosystem in a matter of months, maybe a matter of weeks. What does that represent? Well, first of all, they have $10 billion of capital. Second of all, Tom Lee is part of the Wall Street establishment. He was never part of the crypto establishment. You saw Wall Street merges with the crypto economy, capital flows because it trusts Tom Lee. And then the next thing you know, you have Tom Lee having conversations with the early Ethereum entrepreneurs, with the Vitaliks of the world, or and the like. And what's interesting there is that entire movement becomes commercialized, institutionalized, legitimized, rationalized, becomes a bit older, a bit more credible, and there's 10 other companies that copy. And now what you see is a conversion of the crypto idea of foundations. It used to be, it was like Ethereum Foundation in Switzerland, or Solana Foundation in Switzerland, or Cardano Foundation, all these foundations in Switzerland, because they could not legitimately start a company. And now those foundations will become companies. Those companies will become public. Those public companies have corporate governance, have boards of directors, have civil and criminal liability for their action. They are onshore. They are answerable to traditional structures in Wall Street. And that is going to change the nature of everything that happens in that industry quite a bit. Following that, not long thereafter, you see the explosion of Solana treasury companies. And now there's about half dozen of them including Forward, that just raised about $1.5 billion of capital, led by Kyle Samani. And there's not one, again, there's 6, and they'll be competing with each other for capital. And then if you look at the interviews, and if you look at the industry, what is the killer use case of these networks? What is the killer use case of Bitcoin? Well, this is probably the most important thing I'm going to say right now, which is the world, the entire digital assets economy is evolving, and I think there's a global consensus building that Bitcoin is digital capital. The right technology base for digital capital is proof of work. It is secured by physics, by energy. And if you want to create a scarcity, if you want to create a global commodities of scarcity that can be used as a capital base, you're going to want to use physics to secure it. It's the most robust, most powerful, hardest to tamper with, least fragile way to establish a digital asset in the world. There's maybe a dozen, well-known cryptos that use proof of work. There's one that is 100 times more successful than everything else. That one is Bitcoin. Bitcoin has emerged as the digital capital base of the entire crypto economy. It's emerging as the digital capital base of the world. What's the killer application for a Bitcoin treasury company? It's to issue digital credit, right? Instead of issuing credit on gold, which is how the world ran for 300 years, now we're going to issue credit on digital capital. Digital credit on digital capital. That's one branch of this industry. How big is it? Hundreds of trillions of dollars big. Very big. What does it compete with? Real estate, art, gold, private equity, public equity, bonds held as a store of value. All wealth, right? That is a branch, and that is going to grow. So people say, well, what's going on with Ethereum and Solana and the rest of these crypto assets? And there, what you see now, and you hear it in the words of Paul Atkins, he says, I look forward to a world where we tokenize securities on chain. Okay, what's happened is there's an emerging consensus that, in fact, the proper way to tokenize a security or a real-world asset is on a chain, a smart chain, and there are 3 that are well-known today. There's BNB, Binance Smart Chain. Binance has 270 million customers. There's Solana, and there's Ethereum. Now, there are other chains that are emerging, right? If you talk to the people at Solana, they'll say we're faster and better than Ethereum. And if you talk to the people at BNB, they'll say, well, we do more than Solana does. And then there'll be all the crypto entrepreneurs, Sui, and they'll say, well, we're better than Solana. We're the next generation. So how are you going to tokenize a security? And by that I mean a share of Apple stock, or a share, or tokenize a currency like the US dollar, or the peso, or the euro. How are you going to tokenize a brand? And here I'm talking, Joe Rogan coin or Katy Perry token, We call them meme coins in the crypto era, Trump coin, meme coin, such and such coin, it has no functionality. Well, let me tell you why it had no functionality. It had no functionality because it had no legitimate corporate or celebrity backers behind it, because there was a hostile regulatory attack on the entire idea. There's nothing constructed. Now think about this for a second. What happens when you have legitimate companies, McDonald's, Coca-Cola, legitimate celebrities, Katy Perry, Joe Rogan, with legitimate products issuing a digital token? Well, at that point it becomes a digital product. A digital product, like I've tokenized my country club membership. I've tokenized my fan club membership. Well, what am I going to get? I just get Katy Perry token? No, I get front row seats to every Katy Perry token for every Katy Perry concert for life. Huh? Yeah, I get front row tickets for life. Okay, well that sounds like an asset. Yeah, it's like a membership. You tokenize the membership. Well, how many people want to tokenize a membership? Like everybody. Everybody. Like the Bitcoin community has been very focused upon pure perfect money, and that's fine. But there's 40 million small businesses in the United States, and their issue is, how do I raise money? I'm the dude that does the chess podcast, or I'm the up and coming, celebrity, or I'm a restaurant. There's a lot of tokenized or membership restaurant clubs. I sell you a membership to the restaurant. What do I get? Reservations, good ones, right? There's a lot tickets, tokenize the ticket. There's a lot of what are those? They're digital products and digital services. You can't. Why are they crappy 10 years ago? Because no big company is going to tokenize anything good. How about season tickets to the Commanders games? I'm not going to tokenize them if I'm going to get sued by the SEC, right? If I'm a famous actor, Blackpink, or a famous singer, Blackpink, or pick your favorite, musician du jour. They're not going to do it when they're getting sued all the time without that clarity. What's happening right now is, as soon as the SEC says, by the way, the consensus is, hey, these are not securities. That doesn't mean they're as good a commodity as Bitcoin. There are various degrees of decentralization, and I think that some of these look more like federations, or they look less decentralized, and some of them look like assets with issuers. But you can have an asset with an issuer, and it doesn't make you a security. Just because you have a country club membership, and you can play golf, the fact that you make it transferable doesn't necessarily make you a security, right? So what we've got is this emergent idea that maybe we want to tokenize securities, bonds and stocks. Maybe we want to tokenize real-world assets, a bar of gold, a bar of silver. Maybe we want to tokenize brands, every celebrity in the world. Maybe we want to tokenize products and services and memberships and clubs. Maybe we want to introduce entirely new business models. You buy this token, and then you'll get this privilege in cyberspace or in the real world, etc. Right? There's an evolving market dynamic there. There's already millions of these things issued. 10 million, 20 million, 40 million, sometimes I see. Most of them don't have any real value, but that's because they don't have celebrities, corporations, and real movements behind them. They will have value. And as they do have value, you're going to see an explosion in tokenized brands, tens of millions or more, an explosion of tokenized securities. Why wouldn't you want, for example, why wouldn't you want to be able to take personal custody of your Apple shares on your Android phone in India on Saturday? Okay, now this is interesting. We've given some property rights to Indians. We've given them the ability to move their Apple shares on Saturday afternoon. We freed them from the tyranny of TradFi. The 20th century economy, which is, every mega bank, if you see an organization or a company that's got a building that's 20 stories high or 100 stories high, that's part of the traditional finance economy. The traditional economy developed a certain way, and it's very expensive, and it's very inefficient. And now we're seeing the 21st century economy. And, the way this looks like it's going to emerge is tokenized securities and currencies and brands and products are going to circulate on smart contract networks secured by proof of stake, networks secured by finance. Capital is going to circulate on a network like Bitcoin secured by proof of work, by physics. The killer application of the tokenized economy is going to be new products, new services, capital raising, innovation, efficiency, moving money at the speed of light, maybe moving anything at the speed of light, computer to computer. The killer app of digital capital is going to be credit. How many people get 5% interest from their bank account right now? Okay, a bank account, how many people have a bank account? What you own is bank credit, right? A bank account is bank credit. Okay, bank credit pays minus 50 basis points in Switzerland, 50 basis points in Japan, 200 basis points or less in Europe, 400 basis points right now in the US. It's taxable, at least in the US it is. Our company created a product, Stride, S-T-R-D. It pays 12.7 or 12.6% interest. It's a return of capital. It's 12.6% tax deferred. You have $1 million of capital in the bank. In the US, you're getting about $30,000 a year after tax. $1 million of capital in Stride is $126,000 a year. Okay? $126,000 a year is a comfortable retirement. $30,000 a year is scraping through. $15,000 in Europe is destitution. You know, $5,000, $2,000 in Japan is a joke. Okay? The credit system in the world is broken, right? It is broken. And so it can be fixed. How do you fix it? You issue credit instruments on top of digital capital that will outperform the S&P, at least perform the S&P. In the first year, by the way, I spent 30 years of my life in business. In 2020, I had pretty much given up. I had invented one thing worth $1 billion. I had $1 billion idea. It was MicroStrategy business intelligence software. And then after I invented that idea, I spent like 20 years trying to come up with the second $1 billion idea. I tried alarm.com and angel.com and wisdom.com and emin.com and alert.com. I traveled the world. I circled the world 6 times selling usher.com. I probably forgot half of them. Every one of them didn't work. Okay? $1 billion idea in my life. And in 2020, I thought, well, that's it. I'm not going to come up with a second act. I just retire. COVID hits, lockdown hits, currency hits. I discovered Bitcoin. And then all of a sudden, putting Bitcoin on the balance sheet of a public company is the second $1 billion idea. Yeah. And then, I would like to take credit for it. It was inflicted upon me. This is my humbling observation to you. For 20 years, I tried to use my brain, and my arrogant ego was, I have to invent the next $1 billion idea. And when I finally humbled myself and concluded I couldn't do it, the heavens opened, Satoshi gave me the next $1 billion idea. Thanks, Satoshi. But this is where the story gets interesting.
Thank you, Satoshi.
Then we discover convertible bonds, and that's the third $1 billion idea. Then we discover digital equity via the ATM. That's the fourth $1 billion idea. Then we struggle and think about it a bit, and by not just $1 billion, like the convertible bond was a $10 billion idea. And then this year, Stripe, Strife, Stride, Stretch. That's 4 $1 billion ideas. The year's not even over, okay? And so, and by the way, it was 30 years, thousands of people, hundreds of thousands of person years, circling the world over and over again, working 3,000 hours a year, couldn't find the second $1 billion idea. And then this year, you accept this idea, digital capital. You accept this idea, digital intelligence, AI. I sat on my little laptop, and in 4 hours, that's the fourth $1 billion idea. That's the fifth. 2 months go by. This is the fifth $1 billion idea. 2 months go by. This is the $6 billion idea. Go off to Europe, try to do something, run into some legal thing. Here's the $7th $1 billion idea. And there's a point to the story. And the point is, the people that are changing the world, they're not doing it by working harder. They're not doing it with good intent. They're doing it with technology, right? And the extraordinary technologies of today, digital intelligence, use it or you'll be slow and stupid. Embrace it, you'll be smart and fast. Digital capital, use it or you'll be poor and weak. Otherwise, you'll be rich and powerful, right? And then start to ask the question, can I issue digital credit? Can I create digital products? Can I create digital services? can I create digital currency? Right? Don't allow your mind to be consumed with hate or paranoia or skepticism. We saw what that gets you over the past 4 years. It's like, I said to someone today, it's almost like the administration said, robbers use cars, terrorists use electricity, let's outlaw cars and electricity. People die because they drink alcohol and drive cars. Let's just outlaw that. You can look at the negatives in any industry, or you can just say, fire, electricity, cars, airplanes, they're complicated. There's some bad actors that used them to commit a crime once upon a time, but, the alternative is to shiver in the dark. And I guess I will end with the thought, right, that the entire digital assets industry is approaching the end of year 1 of institutional adoption. It's like you're at the end of the first year when everybody agreed to use alternating current electricity. Don't let anybody tell you that all the good ideas have been implemented. Don't let them tell you everything's mature, right? And spend your time thinking about how to construct beautiful new products and services. How are you going to empower 8 billion people, 400 million companies? Now you can put together the companies with the celebrities, with the brands, with the technology, right? There is a 4-year time frame during which there's a ferocious, innovative opportunity available to all of us. Some people are going to shirk it. Right? You're going to have traditionalists who will say AI is dangerous, digital assets are risky, we don't want to touch any of those, and they'll brag about it proudly. You shouldn't be mad at them. You should be delighted because they are going to transfer all of their money and power and influence to you. Okay?